I've done quite a bit of content on how the U.S. estate tax applies to non-resident aliens. So basically, foreigners not domiciled in the United States that own U.S. assets. A lot of people, before they invest in the United States, aren't clear that many U.S. assets are subject to the U.S. estate tax. Now, the U.S. estate tax is not a small amount of money. The U.S. estate tax can go all the way up to 40% of the fair market value of your U.S. assets if you're a non-resident alien. Now, in some of the videos I've done, and I'll put some of the links in the descriptions to some of the more popular videos that I've done, I talk about different solutions to this, but long story short is this. If you're a non-resident alien who's not domiciled in the United States and you own U.S. property, you only get an exclusion of $60,000 of fair market value. Let's say, for example, you have a U.S. asset subject to U.S. estate tax of $1 million. You only get a $60,000 exclusion, meaning you have to pay U.S. estate tax on $960,000. That's not going to be a small chunk of change. And a lot of times, your heirs have to wind up selling the assets in order to get the money to pay the estate tax.
Welcome to the Wealth Uncensored podcast, straight talk about everything that impacts your wealth. In each episode, I share what I've learned through my own experience and 2 decades of helping high net worth clients structure their affairs to minimize taxes and protect their assets for the next generation. I'll also feature special guests who are experts in their own field, sharing their knowledge and experience to help you protect what's yours. I'm your host, Jimmy Sexton. Let's dive into today's show.
Like I said, I've done quite a bit of content on this. It's been very popular, but I get a lot of questions in the comments about what types of assets are subject to the U.S. estate tax. Now, the two most prominent, the two most applicable are U.S. real estate and stocks in U.S. corporations. Now, when we say stock in U.S. corporations, this is private corporations and publicly traded stocks. If you have a brokerage account with U.S. securities in it, with U.S. stocks in it, doesn't matter if that brokerage account is in the U.S. or located abroad, if it has U.S. stocks, it's going to be subject to U.S. estate tax. As most of the content that I've done, I've said that U.S. real estate and stocks in U.S. corporations, whether they're private U.S. corporations or public U.S. corporations held in a U.S. or foreign brokerage account, all subject to U.S. estate tax. But I get a lot of questions in the comments of my videos asking about things like, what about bank accounts? What about ETFs? Stuff like this. I've gone through the comments. I've tried to put a list together of the different types of assets that have come into question. And I'm going to go through now in this video, in this podcast, which assets are subject to the U.S. estate tax. Like I said, U.S. real estate subject to U.S. estate tax. Also, tangible personal property physically located in the United States also subject to U.S. estate tax. This is going to be things like whatever's in a safety deposit box, jewelry, furniture, cars, and art. Except if the art is on display, is loaned to like a museum or is in transit, then it wouldn't be subject to U.S. estate tax. But otherwise, art in the United States, subject to U.S. estate tax. Basically, if it's tangible property, physically located in the United States, it's going to be subject to U.S. estate tax. What about U.S. bank accounts? Generally, U.S. bank accounts are not subject to U.S. estate tax unless that bank account is connected to a U.S. trade or business. If you, as a sole proprietor through a single member LLC, are operating a U.S. trade or business as a non-resident alien, then those funds would be subject to U.S. estate tax. But otherwise, if you just have a normal bank account in the United States with some money in it, not subject to U.S. estate tax. Brokerage accounts are a little bit different. A U.S. brokerage account is not in and of itself subject to U.S. estate tax, but a U.S. brokerage account or foreign brokerage account for that matter with U.S. securities in it, those U.S. stocks are going to be subject to U.S. estate tax. Likewise, cash located in a U.S. brokerage account would be subject to U.S. estate tax, whereas if it were in a U.S. bank account, it would not be. Stock in foreign corporations held in a U.S. brokerage account would not be subject to U.S. estate tax. Mutual funds and ETFs, if they're structured in the U.S., also subject to U.S. estate tax. Now, what about debts, like monies lent to U.S. persons or bonds? Also subject to U.S. estate tax. If the borrower is a U.S. person, then it's going to be subject to U.S. estate tax. If you're a foreigner and you loan a foreign relative or friend or a business or whatever money, and they're in the U.S., then it's going to be subject to estate tax. Likewise, if you buy bonds or if the debtor's in the U.S., it's going to be subject to U.S. estate tax. That is, unless it qualifies for what's known as the portfolio interest exemption, which is a little bit beyond the scope of this video. Treasuries, also generally subject to U.S. estate tax. I got a question about derivatives, but derivatives is super complex and they need to be viewed on a case-by-case basis, just like commodities, to determine whether or not they're going to be subject to U.S. estate tax. They aren't always, but they can be. Partnerships. So U.S. partnerships, if they're engaged in the U.S. trade or business, or the assets in the partnership would be subject to U.S. estate tax in the hands of the non-resident alien, then those partnership interests are also going to be subject to U.S. estate tax. Like I said, stock in U.S. corporations, also subject to U.S. estate tax. And then I get questions about, what about assets that are held in a foreign trust, U.S. assets held in a foreign trust? The short answer there is not always. However, if the settlor of the trust continues the possession or enjoyment or the right to income of the property in the trust, or has the right, either alone or in conjunction with any person, unless the other person is considered to have substantial adverse interest, to designate the persons who shall possess or enjoy the property or income therefrom, then it would be subject to U.S. estate tax. To try to simplify that a bit, if somebody puts assets in a trust and that trust owns U.S. property, and the person that puts the assets in the trust continues to enjoy the possession of that or the right to income from the property that was placed in the trust, or has basically a power of appointment that they can dictate who should get that asset when they die, then those assets would be included in the U.S. estate. U.S. assets held in foreign corporations, not subject to the U.S. estate tax. Now, there's a couple of other considerations when we look at this. There are a few countries that have estate and gift tax treaties with the United States that may alter the taxation of the above U.S. situs assets that I just went through. That being said, there's not a lot of estate tax treaties out there. A lot of times, in order to utilize the benefits of that estate tax treaty, the non-resident alien is going to have to disclose their worldwide estate to the U.S. in order to be able to get the benefits under the estate tax treaty. Another thing to think about is that if you have U.S. assets and they're not held in some sort of a foreign corporation or a properly structured foreign trust that's going to keep those assets out of the person's U.S. estate, then the assets are going to have to go through probate. And probate is essentially the procedure in the U.S. It's generally a court procedure where the assets in the name of the decedent need to be transferred to the heirs. And to go through this probate process, sometimes it can take a year or more, and it often costs 8 to 12% of the value of the estate. You want to try to avoid that. Using trusts is a huge help. The other thing is the non-resident alien is going to have to file a U.S. estate tax return, which is Form 706. When you file this form, and this is another thing that people don't always contend with, you have to disclose your worldwide wealth and the value of those assets, in some cases, on the U.S. estate tax return. That's obviously not beneficial. And then you need to get what's called a federal transfer certificate, which is essentially a certificate from the IRS saying all the taxes, everything's been paid, and the assets can now be transferred to the heirs. Long story short, if you're a non-resident alien not domiciled in the U.S. and you own U.S. property, any of the types I talked about above, you're going to want to do some tax planning to make sure you avoid the U.S. estate tax, because you don't want to go through probate, you don't want to have to pay the estate tax. You don't want to have to file an estate tax return or try to use complex estate tax treaties. It's much easier to just structure your U.S. investments in advance of making them. That's the best possible alternative. You can obviously restructure any U.S. holdings you have after they've already been acquired, but a lot of times it's expensive because there can be capital gains taxes or gift taxes when you transfer the assets into a structure. I hope this podcast has helped answer a lot of the questions about the different types of U.S. assets that would be subject to U.S. estate tax, because I know a lot of people had questions on this in the comments, and so I thought I'd go ahead and resolve that once and for all with this episode. I hope you've enjoyed it and found it informational. Stay tuned for future episodes.
Thank you for joining me on Wealth Uncensored, where we help you minimize taxes and protect your wealth for the next generation. If you like our show, be sure to subscribe and leave a review. And if you have any questions or suggestions for future episodes, we'd love to hear from you. You can email us at info@esquiregroup.com. And don't forget to visit Esquire Group's website for more information on how we can help you secure your wealth. I'll be dropping knowledge again next week. Don't forget to join us.